Welcome back, YouTube. My name is Nigel MrSchroeter, and today I am here to give you guys some information about how you can get high limit credit cards. Once again, how you can get high limit credit cards and what you need to know that the banks are not telling you about getting high limit credit cards. All right. So first things first, and I like to always say this and get this off the bat. A large factor in getting high limits on your credit cards, of course, is your income. Okay. A lot of the times banks are not going to tell you this, or people are not going to tell you this. You'll watch certain YouTubers. These YouTubers are making, six-figure incomes off of YouTube, and they're reporting this to the banks when they are going in to apply for credit lines. And then they're showing you that they are getting approved for $10,000, $20,000, $40,000 trade lines. But what they're not telling you is that their income is multi six figures. They may be making, $100,000, $200,000 a year off of YouTube and telling you about their approvals, which in turn is increasing their income and offering them the opportunity to get approved for higher limit cards. So I think it's especially important that if you're someone who watches a lot of YouTube videos on how to build your credit, that you realize that the credit space on YouTube is slightly inflated compared to a typical American because the incomes are higher. So if you're watching your favorite YouTuber and they're getting approved for $20,000 and they're making $100,000 off of YouTube, then relay that back to your own personal income and say, okay, at $40,000 a year, I may be able to get $10,000, because I'm making essentially a little bit less than half. I could probably get, $10,000, which would be half or a little bit less than half of that $20,000. So it's extremely important that you pay attention to that and that type of information when you're going to apply for credit and you're watching YouTube videos. Okay, the next thing that you need to be aware of is your credit history is extremely important. How you pay your bills is going to determine what amount of money banks are going to lend to you. Now, there is a way to get around this, but you want your credit payment history as close to 100% as possible. The lower your payment history is, the harder the harder is going to be to get approved for new lines of credits. So make sure that you realize that it's extremely hard to apply for new lines of credit and get approved for high limits if you have missed payments. So try to talk to those banks, see if they'll remove those late payments. Make as many positive payments as you can after a missed payment before applying. Do everything that you can to avoid missed payments at all costs. And then as far as avoiding missed payments, you also want to ensure that you're not just avoiding missed payments, but continuing to make positive payments after any potential missed payment. Now, the next thing, utilization. And this one is extremely important. All right. Utilization has to be low for banks to want to keep lending to you. So one thing that I recommend is, if you're new to the credit game, make sure that you get some business cards or things of that nature that are not reporting utilization to your personal credit if you're planning on getting credit to invest. Do not make the mistake that many people make and get all of your credit as personal credit, and then you in turn are ineligible to get business credit because you have so much personal utilization and personal debt that they don't want to lend to you to be able to start a business. Usually higher lines come along on the business side, so it's extremely important that you're aware of this and you play your game strategically. Now, topic number 4, banking relationships. Make sure that you build a strong relationship with whatever financial institution you're planning on going to get the money from. So that's why I have a system on how you can build a relationship with Navy Federal. I'm about to start releasing some other systems on how you can build relationships with other banks. But it's extremely important to build a tight, close-knit relationship with that bank and respect that relationship, and they will lend to you in turn for you having a relationship with them and making them money. Remember, the banks want to make money too, and they make money off of you. Now, number 5. This is one that doesn't get talked about much, but is extremely important. Banks have competitors. So when you go to competing banks, what it does is it in turn begins to make the other bank or the other credit union a little bit jealous. So if they see that you have a relationship with another bank, they may be more apt to lend to you or lend more to you because they can see the benefit in giving you the money and bringing you away from their competitor to them, which would in turn make their organization benefit. So it's extremely important that you realize this. You learn your banks, you learn your institutions, and you learn, some of their competitors and how you can utilize those systems. Because they're not going to tell you this at every financial institution, but some credit unions have it in their lending criteria that if you have a relationship with other credit unions, that they will actually lend more to you or be more apt to lend to you just because you have a relationship with this other institution. So with that being said, as always, thank you guys for watching. Don't forget to like, comment, and share these videos out with anyone who they may benefit. And also, please don't forget to subscribe to the channel. Thank you all for watching, and we'll see you guys in the next one.